Hey there, welcome back to the Gold and Silver Update, brought to you by the top-rated precious metals company, Goldco. I'm Ron, and as always, thank you so much for joining us today. I tell you, it's been a few exciting weeks because the price of gold hit yet another record high. I mean, this shiny yellow metal just won't stop, and let me tell you, we love to see it. And because of the recent decision from the Federal Reserve to aggressively cut rates on September 18th of 2024, there are many economists and investors who are expecting gold to climb even higher. Just listen to this. According to Bloomberg, gold climbed toward a fresh record day after the Federal Reserve kicked off an easing cycle with a 50 basis point cut. And as reported on MarketWatch, gold is giving you a once-in-a-generation buying opportunity on its way to $4,400 an ounce. And check this out. From CBS News, investors have been keeping a watchful eye on gold's price trends over the past several months, and for good reason. The precious metal has been on an impressive bull run since the start of 2024, with its value reaching new record highs multiple times so far this year. With the latest milestone, gold is up by an astounding 25% since the start of the year. Now, admittedly, many people are concerned that the Fed cutting rates means that the economy may not be doing so well, including none other than former president and current presidential candidate Donald J. Trump. A senior advisor to the Trump campaign said in a statement to Politico that the decision by the Fed shows the economy and the job market are in very bad shape. The Fed has started cutting rates this aggressively, this close to a presidential election. He said this was because the U.S. is headed for a recession. I mean, even Trump himself said, I guess it shows the economy is very bad to cut it by that much, assuming they're not playing politics. So, what do you think? Do you think the economy is running strong, or is Trump right? Please, let us know in the comments below. Now, there's another interesting angle to this 50 BPS rate cut. Usually, they cut a simple quarter point. This is double that. There are some saying that this is looking eerily similar to when they cut rates 50 points in 2007. You know, right before the Great Recession struck. Remember that? In 2007, the Fed made a 50 basis point cut at its September meeting. Stock markets went on to set all-time highs in early October, then began a long and gradual decline that accelerated in 2008. Meanwhile, the Fed continued to make periodic 25 basis point cuts, all while telling us the economy is doing just fine. But granted, we haven't had our Bear Stearns or a Lehman moment yet. So there doesn't appear to be any single major driver of potential recession. But given the Fed's track record on rate cuts and the history of recession occurring shortly after the Fed's last two major rate cut cycles, the question of recession is most likely right at the front of many people's minds. I guess time will tell, because the coming months will show whether the economy follows the same pattern as it did back then. Granted, every recession or financial crisis is a bit different, but this one so far looks to follow the same pattern we saw in 2007. But what can you do? If the economy ends up in a crisis that of 2008, we might expect to see the following: a gradual decline in stock markets later this year and early next year, rising gold and silver prices, and more signs of growing unemployment such as layoffs, buyouts, and return to office mandates. You know, we could be entering a period of time that is quite similar to that of 2007 and 2008, and many Americans could be woefully unprepared. Debt levels are higher than ever. Credit card delinquencies are rising, and we have yet to feel the real impact of higher interest rates on the commercial real estate market. A perfect storm of events could be coming together that could result in another financial crisis as bad as 2008 or worse. There are many Americans that have already seen the writing on the wall and have started to move their wealth into precious metals like gold and silver. Both gold and silver performed well during the aftermath of the 2008 crisis, and gold gained 25% during the same period that markets fell more than 50% from October 2007 to March 2009. You've got a lot of bullish calls about gold and silver, plus, with them being safe haven assets, can you really go wrong? So here's what you can do. Just give a simple call to the top-rated precious metals company Goldco, and you can learn more about how gold and silver can potentially help you and possibly even safeguard your financial future. You see, Goldco works directly with mints around the world to source gold and silver coins directly from the mints that produce them, ensuring that the gold and silver you buy is 100% authentic. And with over 6,000 five-star reviews and over $2.5 billion in precious metals placements, well, Goldco has built up a reputation as one of the best and most trusted gold companies in the country. Right now, Goldco is offering a free gold and silver kit to help inform you about how gold and silver can help. Simply click on the link below or use the QR code that you see on the screen to get yours today. Well, everyone, that's it for today's market update. And don't forget to show us some love with a thumbs up and a click on that subscribe button. Until our next glittering journey, stay curious and keep shining.